Trade less, make more money. David Jaffe with BestStockStrategy.com, and in this video you're going to learn why it's very important to trade less, and the less you trade, the more money you are likely going to make. Tastytrade tells you that you have to trade small, trade often, and in my opinion the reason why they tell you that is that their strategy sucks, and additionally they're trying to churn your account and generate fees for their brokerage, Tastyworks. Now the funny thing is that Tastyworks is actually incredibly expensive on a relative basis. I trade with E-Trade and I pay 10 cents for every contract that I sell. Tastytrade, or rather Tastyworks, charges you $1 with a $10 cap, and additionally they pass through all of their exchange fees, which work out to about 13 or 14 cents per contract. So the funny thing is that the exchange fees that Tastyworks actually passes through to the consumer are more than I actually pay at E-Trade. But that's the subject of another video. The fact is that when you trade often, you're going to be less judicious and less careful of the actual trades that you make. That's kind of like saying that you should play baseball and you should swing it every single pitch. If you want to get out every single time, or if you want to bat 100, then yeah, it makes sense. Go up there and swing it every single pitch. But when you trade often, you are intentionally trying to get yourself out because you are swinging at really bad pitches. Now I know that if you're watching this video and you're a Tastytrade fanatic, you're going to say, David, that's not exactly true because they tell me to screen by IVR and only trade in the most liquid underlyings. Okay, yeah, that is true what they're telling you, that you should scan based upon IV rank and IV percentile and then trade a lot of underlying and trade only in the most liquid underlyings. The problem with that is when you scan based upon IVR, that is not a major component that should determine whether or not you open up a trade. The fact is that IV percentage is reflected in the amount of premium that you receive. So yes, like IVR is a great back of the envelope way for you to quickly discern through and sort through a lot of trading opportunities. But the fact is that when you look at the actual premium that you are receiving for opening up a new trade and for selling an option, the only question that is the most paramount and that is the most important is, am I receiving enough premium to compensate me for my perception of the risk that I'm taking? And yes, high IVR is one component of the premium that you are receiving. But if you do not believe that the trade that you're making represents a good opportunity and that it is amply compensating you for that risk, then why are you going to make that trade? You should not trade often, because what happens when you trade often is that you enter into trades that are going to end up being challenged. Also, Tastyworks tells you that, or Tastytrade tells you that you should keep negative delta. It also doesn't make any sense how Tastytrade built up their company on selling option premium, which has both a volatility and a theta time decay component, but then they encourage their users to actually trade futures, which does not have a volatility component, and it also does not have a theta component. It just completely doesn't make sense. Also, I really have no idea how Tom Sosnoff or Tony can be profitable traders, considering that right now, November 20th of 2019, the market is close to an all-time high. We make money by selling options by acting as a casino and acting as an insurance company. By shorting the market and keeping negative delta, you are essentially losing money on every single casino player that comes in. Like, it's almost like every single blackjack player comes in and hits 21. Or if you're an insurance company, every single car that you insure ends up getting into an accident. So again, going back to the trade less often will increase your profitability. You need to allocate capital only to the best opportunities. And sure, you can use IV rank as a way of determining what some of the best opportunities are. But the only question that you should ask yourself is, am I being compensated enough based upon my perception of the risk that I'm taking. And selling an option in a company like Netflix or Tesla is not the same as selling an option in a company like Amazon or Google. It's just not the same. There's inherently much more risk in selling an option on a company like Netflix or Tesla or Beyond Meat, etc. So by them telling you that you should trade often and that you need to increase the number of occurrences, in my opinion, that is leading you to financial disaster. And that is also one of the primary reasons why almost all of my students have also previously tried to make money with Tastytrade, and almost all of them have lost money. And I believe almost all of them have underperformed the market. Again, trade often and you will lose money. If you don't believe me, go try it yourself. Go out and trade the Tastytrade way, where you scam based upon high IV rank and then indiscriminately sell premium on that. You will find out that you are going to lose money, especially when you sell options on the call side when we're in a bear market and the market is at its all-time high. Go to BestStockStrategy.com, enter in your email address and receive the Best Options Trading free education. That free education is valued at over $400. So again, you can visit BestStockStrategy.com, enter in your email address and receive over $400 of free valuable options trading information. If you don't believe me and you want to trade the Tastytrade way or trade with Option Alpha and trade often so that you can increase your number of occurrences, no problem. Go knock yourself out and do that. What I can tell you is I have used Tastyworks and my account is up over 100% this entire year, and I have 0 losing trades this entire year. Tom Sosnoff does not show his financial statements. And I know he's going to say, oh, well, he's probably worth like a few $100 million. Okay, I mean, that's great. I have an account statement on BestStockStrategy, which is also showing a few $1 million. So, I mean, he doesn't show anything. And I'm telling you that trading often is going to cost you money. Leave a comment below and let me know your thoughts on whether you believe trading often is beneficial for your trading account or whether it's going to cost you money. And I appreciate your attention, and let me know your thoughts below.